Hey everyone, if you're a salaried employee in India, I've got some pretty good news that might be showing up on your payslip soon. The government just updated some tax rules on employee perks, rules that are decades old, and in this explainer, we're going to break down exactly what this means for you.
So think about it. What kind of benefits do you get on top of your salary? Maybe a company car? Or maybe your employer helps with your child's education. If you get perks like these, then you are definitely going to want to pay close attention.
That's right, the Central Board of Direct Taxes, the CBDT, has just issued a really important update that could literally mean more money in your pocket. These new rules are all set to kick in on April 1st, 2025.
Now, to really appreciate why this is such a big deal, we need a little context. Because we're not just talking about old rules, we're talking about rules that are practically ancient in economic terms.
I mean, just look at this timeline. One of these tax limits hasn't been touched since 2001, and the other one, all the way back in 1993. Yeah, that's more than 30 years ago. It's safe to say our economy and what people earn have changed just a little bit since then, right?
And that's exactly why this update was so needed. As S. Vasudevan from Lakshmi Kumaran and Sridharan Attorneys points out, these limits were, quote, fixed way back. The whole idea here is to finally align these old rules with today's world and give some much-needed relief to employees with lower incomes. All right, let's dive into the first major change, and it all revolves around a very specific tax category called the specified employee. But hold on, before we get into the weeds, let's just make sure we're all on the same page with a key term you're going to hear a lot. What on earth is a perquisite? It sounds way more complicated than it is, I promise. A perquisite, or as we all call it, a perk, is really just a benefit you get from your job that isn't plain old cash. Think of it like a bonus, but instead of money in your bank, it's a service or an item. And here is why that word matters. For a certain group, these specified employees, the value of perks like the ones you see here, like a company car or help with utilities, is actually considered taxable income.
So who exactly falls into this special category? Well, it's pretty clear. You're a specified employee if you're a director or if you have a big ownership stake in the company, or, and this is the really important one, if your salary is above a certain limit. And it's that third point that just got a massive overhaul.
And here it is. The old salary threshold to be considered a specified employee was just 50,000 rupees a year. The new limit? It has jumped all the way to 4 lakh rupees. That's not just an increase, that's an 8-fold leap. It's huge.
So, what does this actually mean for you? Well, it's pretty simple. If your salary is up to 4 lakhs, you are no longer considered a specified employee. And that means those valuable perks, like your employer covering your kid's education, are now completely tax-free for you. This is a real game changer.
Okay, so that's the first major update. The second one is just as important, especially when it comes to health. This one is all about getting medical treatment abroad.
So, under the old rules, if your employer paid for you to travel overseas for medical care, it was only tax-free if your total income was under 2 lakh rupees. Well, the new rule quadruples that limit, all the way up to 8 lakh rupees. This opens up a really critical benefit to a much wider group of employees.
It's a pretty straightforward change, but a really significant one. As Almarpal Chadha, a tax partner at EY India puts it, travel costs for overseas treatment will now be exempt where the employee's gross total income does not exceed 8 lakh rupees. Simple as that.
Now, there are a few conditions, of course. This exemption is for treatment for either you or a member of your family. It also covers the cost of travel and stay for the patient and one person to go along with them. And finally, the spending has to be within the limits set by the Reserve Bank of India.
Okay, I know that was a lot of numbers and tax jargon, so let's just boil it all down to what you absolutely need to remember from all of this.
Here's your cheat sheet. The specified employee salary limit is now 4 lakhs. The income limit for that tax-free overseas medical travel is now 8 lakhs. The bottom line, way more employees are now going to be excluded from paying tax on these kinds of perks. And just to say it one more time, these new rules go into effect on April 1st, 2025.
So, what's the big picture here? Look, these aren't just minor tweaks to the tax code. They represent a significant and, frankly, long overdue adjustment that's going to provide real tax relief, especially for people in those lower and middle income brackets. It's a step toward making our tax code actually reflect today's economic reality.
And that leaves us with a final thought. These updates were clearly needed because the rules were just stuck in the past. So, as our economy and salaries keep changing, what other parts of the tax code do you think are way overdue for a modern update? It's definitely something to think about.